Welcome, everyone, to Profit's FinTech Frontier, our new interview series where we speak with leaders and innovators who are disrupting and transforming financial services. I'm Saurabh Wahi. I'm a partner in Profit's digital discipline, and I co-lead our financial services practice. Profit, for those who aren't as familiar, is a digitally powered, creatively inspired growth and transformation consultancy. I'm very excited to welcome our guest, Patrick Stal, today. Patrick is a vice president of global marketing at N26, a fast-growing mobile bank with over 8 million customers across 25 countries. Welcome, Patrick. Would you share a few words about yourself? And for those who aren't as familiar with N26, perhaps a bit more about the company?
Yeah, absolutely. I'll start with myself, but then I'll move into the more important part, which is the company. So great to meet you and to be on the call. And thank you for making the time. I'm Patrick. I think I might sound American. I'm actually half Dutch, half German. I've lived in a host of countries, and I'm deeply culturally confused. I think that's probably part of what makes me a somewhat decent marketer. At least I love the field because we get to work across so many diverse audiences and countries, certainly in my role as a global marketing lead. I have two girls. We live in the Netherlands, and yeah, I lead marketing at N26. So let's jump straight into that. N26 is one of the world's leading digital banks, as you've just said. We've recently been nominated and received the award from Forbes that we are the world's best bank, which is amazing. And that's an accolade that we've received really based on customer reviews and customer insights. So great to hear that what we're trying to achieve is starting to land. As you said, we have over 7 million customers globally, and I lead our marketing functions. So as I've promised, happy to be an open book and to share any thoughts, insights about our business, the way we run things, as you'd like.
Patrick, there's been a surge of interest in digital native banks, particularly as we emerge from the pandemic. Could you tell us a little bit more about what makes N26 unique and different, and why it matters?
Yeah, 100%. So, and I think let's go back to the beginning. And I think part of the beginning is the financial crisis. And I think what started to happen off the back of the financial crisis, I think we can look at it in two different parameters. One of them is a much more gen pop understanding of financial services. So users, customers that had never really thought about switching banks during the financial crisis were suddenly alerted and awoken to banks going bankrupt, loss of savings, the bailouts. And suddenly mortgages, packaged derivatives started to become part of at least the news cycle. And so the general population has become incredibly intelligent around basic financial matters through the financial crisis. And if nothing else, and potentially most importantly, trust in traditional banks at the time really started to plummet. So I think the market was ripe for change. At the same time, people outside of the financial system, as well as inside, but specifically outside, said there has to be a better way to do this. And that is really the origin of N26. And so from personal experience, founders setting out to build something better, and building something better around the very basic functionality of putting your money in, holding your money, and providing financial services from a transactional, in Europe certainly, debit account structure. What makes us different is that we started to do this at scale, and we started to really build out a company that's become the world's best bank today. As we said in the introduction, we have 7 million customers. But I think what's really still different, and what was different at the get-go, was the user experience. I think N26 really set out to build something that is incredibly fast, responsive, easy to use, and affordable.
As you sort of reflect on your journey so far, across the many years that N26 has now been in business and has been delivering this incredible customer experience to customers, what do you think has been some of the most challenging things that you've had to overcome in trying to bring this experience to your customers?
Yeah, challenges, plenty of them. And so before we dive into the challenges, how we solve them, let me also touch on some of the exciting parts, right? There's always that early phase. There's the initial piece. There's the finding product market fit, discovering that you have product market fit, and then seeing a product and a business and especially in our case a brand take off. Hugely exciting. And then it becomes more and more challenging You start to understand that you have a great product. The category starts to understand that you have a unique product. And as customers start to get more exciting, they start to speak about you. That word of mouth starts to generate growth. But at the same time, you start waking up in the middle of the night going, how do we maintain this? Not the growth, but how do we maintain the responsibility and deliver on the responsibility to differentiate and to deliver on this new promise that we've created for our customers. In the meantime, competition starts heating up. Traditional banks become more digitally savvy. New entrants come into the market, and you start to hit a moment. And I think if you look at the market today, sort of the moment that we are in is where there's been an incredible unbundling of the financial services offer globally. Mm-hmm. And I think we're about to head into rebundling. People are talking about financial super apps. And so with that trajectory, if you look 5 years down the road, I think one of the challenging pieces is going to be how do you really continue to differentiate? How do you carve out a niche? And the way that we're doing that is with religious customer focus and making choices, right? And deciding not to be for everybody, deciding that if you want a bank that takes diversity, inclusivity serious, we're here for you. Deciding that if you are a bank if you want to bank in a way that's not complex, we are there for you. If you want to be listened to, we are here for you. And again, if you want that unique experience, then we will be here for you. And that's the lens through which we take it. But I think what we also try to do for our customers is go way beyond what traditional financial services brands do. And this is a bit of future music, and it's not a promise in terms of products, but to me, the brand is important. And I think the brand eventually should be able to survive our financial services offering. So today, what we're doing is we're giving people more confidence, right? We want to be a bank that 100 million people love to use, and we're about 7% there. Right. But that sense of delivering you sort of an experience that makes you feel better about yourself, you kind of walk away going, I think I got this. And trust me, for most people, that's the first time in their lives when it comes to banking. That feeling, I want to make sure we continue to deliver on that.
That's great. That's great. Thank you. You touched a bit on this in your response to your previous question, that competition is heating up. There's many other both traditional and new disruptors entering the space and thinking about how they can serve customers more effectively. In this context, how do you think about building and growing a business? Is there anything that changes? I know you talked about a real sharp focus on customer centricity and the customer experience. Talk to us a little bit about what changes in the context of both traditional and new sort of entrants coming into the space.
I think the first thing that I saw this at TomTom, we started to see it at Uber. Later, we're seeing it within financial services now. I think the first thing that happens is a new entrant comes into a category and drives real innovation, finds new product market fit, and starts to drive growth. People start to pay attention. Competitors start to pay attention, and they throw up barriers. So that's chapter one. And we've seen this from financial services providers across the globe where we operate. They throw up every possible barrier. That could be financial in completely over-investing as a competitor to make sure people don't leave. This could be actually restricting the ability for people to switch their accounts or their salary. This could be through deep regulatory and governmental relationships that they have that they leverage to sort of penalize us or at least kind of limit our growth. And there's very much kind of a David versus Goliath perspective there. But at the end of the day, what does happen is they start to improve their own products and services. And if you think about, if our mission was to provide better financial services, then we might stop at the point when everybody else is digitized, when everybody else is providing that perspective. But I think we really want to do something more than that. Then what happens is you almost get a diversification of the offering. So traditional players get better, new entrants come, and you start to get the niche players. Banking on wooden cards, banking for audience A, B, C, banking with service D, E, F, and you start to fill in the matrix of things that have never been. I think that's where we're sitting today. And what happens there is quite deep customer confusion. Some people enter into those niches. Other folks are seeing so much offering that they start to take a step back and say, well, where can I just get all of this? And that's where you start to go back into rebundling. Right. Differentiation is the key here, and really understanding who you're building for, and how you're going to build differently. If somebody once said there's probably nothing new in financial services, I disagree. I think we are going to drive real product innovation that will come from the fact that everybody within the business is deeply inspired by the mission and the customer value proposition, and hopefully that makes sure that they have different ideas to our competition. But there is a phase that you go through where customers are generally confused, and low engagement had peaked in the last years, and now engagement in the category is decreasing as there's so much offering. They'll look to aggregators, they'll look to people that are helping them navigate that ecosystem, and it becomes more challenging for us. So standing out from the crowd, making sure we build good product, and I think also our increasing user base having a voice in that conversation, saying, you can trust N26, they will service you well. It is a fantastic experience. And look, here are new things that they're building out. This is continuously the reason to join.
Yeah. Wonderful. You talked about the value of customer centricity and really being honed in on the experience. We've seen, as organizations grow and financial institutions become larger and larger, they tend to develop silos across, call it product lines or geographic lines or, or functional lines. As your portfolio grows and as your organization scales, how do you think your organization is going to try and avoid developing some of the silos, which, oftentimes impede the true sort of customer centricity you're talking about as being so important?
Yeah. Should we talk in a couple of years? See if we succeeded. Look, we're a 1,500 person company right now, servicing 7 million customers. I think you sort of, the question makes it hard to answer in what is really my belief, which is the only way to do it is to keep the customer at the heart.
Yeah.
And functionally, you are likely to organize in places based on product or technology or an infrastructure or ecosystem. And in those situations, I think over-indexing on having a red thread across those teams, which is likely to be the customer or the market, and reminding each other that if we're not organized by customers, that we need to over-index in that thinking in other places. And so it's, I think, a perpetual reminder, infusing the organization with insights, inspiring teams with knowledge, and as much as we can also bring the customer into the business. We see every interaction. Our engineers can see exactly what people do on the platform, what's working, what's not, what's broken, what needs to be optimized, where the dead ends. And so while we spend a lot of time physically, hopefully in the new normal again, with customers in conversations, we also spend time with them every second of the day because they interact with a digital product that's very visible to us. It's almost like we have them in a store,
right,
telling us through their behavior what they think works, what they think doesn't. And that in itself breeds a lot of customer centricity.
My final question, thinking ahead, say, call it 5 years out, how do you think the future of banking services is evolving? You talked about rebundling, you talked about a few other points. How do you think customer expectations might evolve? How do you think the product and service mix might evolve? Any thoughts on that?
Yeah. I think with the rebundling in some places, the risk of commoditization that we've talked about as rebundling starts to occur.
Yeah.
I think we are in 5 years going to see a large number of people there once again with a financial services provider, with a bank, that they feel, I would say, blasé about, where they know that they have a suboptimal solution, where they're frustrated about the payments that are being taken from them. But the category to them has become, again, low engagement, and they're not looking to switch just because it's a hassle. And I think that's going to be one part of the market. I think the other part of the market is going to be incredibly engaged. Yeah. And I think we're going to see a bit of a kind of a split, and where people are orienting themselves now. We might see some trial in places, but with that reaggregation, people slipping back into existing behaviors. However, through that trial and discovery, I think an increasing amount of people are going to find financial services provider that give them an amazing experience, that treat them well, and that gets us to value. And I think increasingly customers will recognize the value that they perceive they get from these vendors, from these platforms, much like ourselves, I think they will in turn become valuable customers from a monetization perspective. So we spend a lot of time talking about customer lifetime value, for example, right? Which is to me entirely reflection of, at the end of the day, the value that a customer perceives from us. And if you think about, I think Forbes estimated in the US, traditional banks earned $11 billion off of ATM transactions and in interchange last year. That's a huge number. And I'm fairly sure customers didn't necessarily perceive that as a huge added value. And so there's so much value in this market that's being taken from customers and into traditional companies that aren't delivering perceived value back for it. And I think we're going to see a shift of that customer value to places where they consciously feel they're getting something for their money.